Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for April 15th, 2018. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 0.90 rose from 0.70 last week, advancing further within bearish territory. The total count of securities in bullish or bearish patterns increased 4% to 2,793. The count of bearish stocks decreased 7%, while the count of stocks in bullish patterns increased 19%. The Pirls PNF market breadth summary chart shows us a market now 11 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To subscribe to the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 71 points for the 12th advance in 26 weeks. At a negative 17.28 points, it continues below all 9 tops in the last 30 months and continues above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 2 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on lower average daily volume. Momentum. The CCI 20 daily on 4/13 at 4.19 is up from a negative 84.02 last week and at about a negative 1.64 the prior day. It now has 1 day above zero. At Monday 3/26 close, it had 6 days below zero for a change of Woody's direction to down. It is now within the plus or minus 50 range for a valid zero line reject short entry signal if the CCI 20 daily falls sufficiently next week. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 102 weeks ago, while the daily CCI 20 began a Woody's downtrend 2 weeks ago. The CCI 20 weekly rose to a negative 19.85 from a negative 62.16 last week, pivoting outside the plus or minus 50 range required for a valid zero line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and only 2 of the bottom 5 are negative. Summary: oil, oil services, and some tech on top. REITs, KBW Bank, and gold and silver on the bottom. Bullish, disk drives, and computer hardware have left the bottom 5 and entered the top 5. Gold and silver has entered the bottom 5. Bearish, Oil continues in the top 5. REITs and brokers have left the top 5. REITs and KBW Bank have entered the bottom 5. Oil Services has entered the top 5. Focus this week from www.dailyreckoning.com. 4 flashpoints of volatility by Nomi Prinz. The following are brief excerpts. 1. Trade wars flashpoints from China to Canada and Mexico. If financial anxiety builds, a trade war could ignite a currency war. That would cause central banks to protect or position their currencies in order to fight a trade war, inflicting a pattern that elevates volatility on the markets. Expect trade war headlines and related action to pump up and tear down the markets on any given day. 2. Geopolitical flashpoints. Now that President Trump has John Bolton as his national security advisor, the geopolitical flashpoint has increased even further. 3. Stock buybacks flashpoints. In February, my former employer, Goldman Sachs, indicated that S&P 500 firms would return $1.2 trillion to shareholders via buybacks and dividends in 2018. We see this pattern continuing and acting as a positive counterbalance to any of our negative volatility flashpoints. 4. Washington political risk flashpoints. I'm in D.C. often. Since President Trump took office, I have personally met with more Republicans than Democrats to discuss financial and economic policy, my expertise. One of my favorite congressmen from a southern state recently told me, quote, "All this stuff, it just makes your head spin right off. Try getting anything done." Close quotes. That signals that markets are being left in the dark to guess what happens next. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl. www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant April weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.